Let's talk about why a lot of people fail or don't get the result they want when it comes to closing deals, business acquisitions, making more money through acquisitions, independently if they are private equity groups, search funds, individual investors, God, even investment bankers and brokers. It applies to all of them. I'm going to share my thoughts after working with a lot of these providers or these investors, if we want to call them this way, across the globe in different niches because I spotted some patterns that are actually conducive to success and others that are less conducive to it. And believe it or not, but sometimes people become their own worst enemy when it comes to this process because they believe they can actually weasel their way out of a situation without taking any risk, or at least trying to reduce the risk to the bare minimum while then getting a massive upside. And I think that is just not natural to any business. And the few that realize that are ultimately able to close more deals, find more deals, and ultimately make more money. So for those of you who don't know me, my name is Marco Palmero. My company Ulysses uh, basically finds deals. We are in deal origination, and we help private equity groups, search funds, any person that wants to identify more companies off market and finding these deals, so they spend all their time closing them instead of just juggling between multiple things and having to worry about where their next transaction is going to come from. Now, what are some of these patterns that I've noticed happening across the board? I mean, I think there are a few things that people struggle with when it comes to finding the right deal. And I think the most important thing that we need to touch on is this feeling of uncertainty that a lot of them have around the process. Because of course, not all transactions that you're going to look at are going to close, right? That's just part of the game. It's almost like in business, not all the sales are going to close all the time. You're not going to have a 100% close rate. Um, so a lot of them start with this kind of like fear within them. And as a consequence, they want to minimize their risk and maximize their upside. And now, to some extent, that is just fair because as business owners, we're all trying to do that, right? Minimize our exposure, maximize our upside to make money. But at some point, a lot of them end up in a situation where they become an obstacle that steps in between their success and the goals that they want to achieve. I'm actually going to share a few examples that come to mind right away, then we can dive a little bit deeper into the details. So there was a search fund that came to us beginning of the year. He was committed to finding deals purely through on-market resources, and he wasn't willing to pay any of these providers anything until a deal was closed. The problem he faced for 8 months straight was that he was only getting sent the worst opportunities, the leftovers, simply because nobody was taking him in. It was not giving him enough importance because they said, yeah, this guy might deliver, might not deliver, has no credibility, no track record, plus he wants us to work for free for him. And so even brokers that generally do work on commission, by the way, were still very reluctant to doing business with him because they had a bunch of other providers that were much more trustworthy that they could deal with when it comes to deals on pure success, and they would rather deal with them rather than dealing with this guy. So after 8 months, he came to us, and again, we don't generally do success-based engagement because we are kind of like your fractional M&A team. We're not intermediaries, and so that was the feedback we give him the first time, but also the second time. But the second time, it was interesting to see that his thought process had evolved, and he said, "Okay, I think I wasted 8 months of my life because I'm not any better than I was 8 months ago. I looked at a lot of deals that appeared to be opportunities, but in reality they were not. Plus, I don't even have a good read on the market because I just got sent, again, the leftovers. And I don't know, there might be good deals on the market. I'm just not aware of them. Maybe a lot of them are closing, but I just don't know they exist." And the tragedy of this was that he didn't shift his mindset and is still trying to solve the issue that way. And I guess is now a 13th month into it without a closed deals, which is, again, is running out of runways. Another example that I can give you that is kind of similar and is more on an institutional level. It is like it's for investment bank that came to us and wanted to source more deals, and was facing this problem because he basically left a large investment banking firm and he built his own boutique shop because he wanted to do things on his own, maybe work a little bit less but make a little bit more money, be more in control of the process, and so on and so forth. The challenge he was facing was that he was relying entirely on his own network to find deals, and so he was able to get some of them through the door, but that volume was not as good as it was when he was back at the large company. The reason for that was actually quite simple. But before that, he had the big corporate shield that he could use to get more deals through the door just because the company had huge credibility. Now he didn't have that, but he was still feeling that he could leverage his existing network alone, while in reality the situation had changed drastically and he needed to find a different way to source deals. And so he was stuck in this pattern of behavior of trying to make more out of the same network. And that wasn't really possible because, again, the variables had changed. He didn't have that corporate background that he could leverage to ultimately get more flow. And he was unwilling to make that change. And ultimately, he was wondering why, the performance of his small advisory shop was stuck, year after year. And the issue was actually quite evident. It's like he wasn't willing to do something different in order to change the situation. Now, how does that tie to the concept of why a lot of these people fail? Well, because they don't realize that we are operating in an industry that, yes, it's very volatile. So we do need to look at a lot of opportunities before we close one. But it is also true that once one of these opportunities closes, there's a disproportionate return generated out of that transaction. So it's not like a sale of a product or something like that. You're just making millions virtually every time. And even if you're an advisor, let's say that you do a $2 million deal and you charge 10% of it, you're still going to make 200 grand out of it. So it's a pretty good outcome. And people are still unwilling to invest, let's say 20, 30, 40 grand to get that 200, or maybe to get that equity play as a private equity group that is going to generate a $10 million investment for them. And I think there is a fine line between trying to minimize your risk and just being stupid and being your own worst enemy. Because if you keep doing things that have produced just marginal results over time, it is very unlikely that these things are going to get better over time. And I just given you two examples that are kind of like emphasizing this point. And so people, I feel, need to go through a mindset shift, a few of them, because some providers do understand the importance of generating more and investing into a process that is going to deliver disproportionate returns. But some of them don't, and they need to go through that mindset shift if they really want to get to that next level, or if they want to close that first deal faster, or if they want to triple the amount of transactions that they close every single year. And again, it gets down to the math and to money, because that's ultimately what we care about. And the outcome generated by any transaction you close virtually justifies, I don't want to say any investment, but virtually every single investment that you're going to make. Because again, you make $1 million deal, $2 million deal, how much is that worth? Quite a lot, right? How much would you be willing to pay in order to get that deal done? Quite a bit. I guess the issue comes down to people's lack of confidence in terms of ability to deliver on the deal. And so given that level of uncertainty, there is less proclivity towards investing money towards the process. But also, and you might be one of these people, so don't hate me for saying this, but there is the pattern, almost a delusional pattern that people go through, which is, well, I'm just not gonna take that risk, but I would gladly pay somebody if something gets done. The problem with that is, in most cases, you should make that person your partner, right? Because nobody would take a risk that is basically associated to the transaction itself unless they then get to become owners of that thing, right? It's almost like saying, yeah, you find me the deal, or you bring me the deal that I'm gonna close, and then I'm gonna pay you a percentage of it. And I'm like, yeah, I'd rather do the deal myself, right? If I need to find it for you, then I can just execute on it. So there's a fine line between these two things, and people sometimes don't realize that fully. Plus, there is this trust element that needs to be considered, which kind of ties back to the example that I gave you about the investment bank. Sometimes there might be circumstances where people will go through these trust-based engagements a lot, but that will only happen when a relationship has been developed over multiple years, right? Because you know the other guy very, very well, and you know he can deliver, and vice versa. So you're going to do deals on that basis. But in all other circumstances, that's pretty difficult to find and pretty difficult to get. But still, people want that out of every relationship they develop. And then they wonder why they don't get the results that they were hoping for. The problem is, again, is they're trying to squeeze something out of every relationship, while in reality, they should behave in different ways and ultimately allocate resources towards an outcome that they know they can get. So again, the clear example is, okay, I want to close a $5 million deal. How much would that deal be worth if I were to find it and close it tomorrow? Well, it will be worth, I don't know, 50 grand. Okay, so I'm willing to invest as much as 50 grand towards identifying that deal, even if I'm an advisor. How much in commission do I want to generate out of this transaction? X. How much am I willing to invest to generate that commission? Okay, it's Y. And then you go through that process and you find a solution that can get you that type of result. Again, taking another example to make it very simple, it's almost like any other business. It's almost like saying, I'm a business. I grew so far purely through word of mouth, but I want to 10x the business, and I want to get that done only through word of mouth. Well, the chances of that happening are actually quite slim. But if you're willing to do other things, ads, affiliates, cold outbound, whatever, then you can grow the business. And the same applies to acquisitions, right? It's like you can still keep relationships that you've developed over time, or on-market deals and broker deals that you find active. But you also need to understand that if you want more results, more deals, you want to make more money faster, you cannot just rely on those, and you need to control part of that process. And that's what a lot of people struggle with, right? They feel everything can be put on to somebody else. Well, in reality, with control, you get more out of your own process. And I think it's interesting, because a lot of people then fail for these reasons. And what I mean by failing, means different things. If you're a search fund, it means that you go 24 months, you can close your deals and you need to shut your search down. If you're an investment banker, you don't hit your quota in terms of deals. If you're a private equity group, you cannot allocate all your capital by the end of the year. The way people fail are actually different, but I guess the root cause of a lot of these issues is ingrained into that process. And yeah, I think if you look at the major corporations or the big firms and how they originate deals, you will see that they do everything they can in order to get their hands on the good deals as fast as humanly possible, because they understand that the returns they can generate out of a good deal are almost always justified, and almost always justify the investment they make to find the deal. And so I think, again, if people are able to reframe the way they think about origination, and they look at it more as a business rather than a one-off thing, then they can really start to build longevity into any business they want to create. If it is an advisory business, if it is a roll-up company, whatever. And then they can really allocate resources productively to get the outcome they want. But that, again, goes through a path of understanding that there's a system that needs to be built. It's not just random effort. And there are processes that you need to establish in order to get to that particular outcome. And for some of these folks, it is actually very hard. Some of them have been at the business for 20, 30, 40 years. they transitioned out of a big corporate firm and they're doing things in a certain way and they're not going to change, that's fine, but then they cannot expect to get different outcomes out of what they've been doing, because again, the same input, if you put in trash, you're going to get trash at the other side, right? You need to improve the input and then you're going to get a better output. So those are just some random thoughts about why people fail in acquisitions, depending on who they are. If this resonates, I mean, you can want to map out a system to get more deal flow and streamline your origination process. You can check the link below, book in a call with our team. We can map out your situation, kind of like dissect it, and basically create a plan that will fit your specific thesis so that we can then find you more deals. You can close more deals faster. And if that is, again, of interest to you, you can check the link below. But that's pretty much it. And we will talk in the next video.